Hello, everyone. Thank you so much for joining us on Bergen County today. I'm Debbie Marcantonio with Christie's International Real Estate, and today I'll be featuring a very special guest that every home buyer needs to watch. If you're in the process of looking to purchase a home this year and you're confused about how to qualify, what are the requirements, and how much should you be putting down, then get ready, because my special guest will give you the scoop on what it takes to get you approved for a home loan. So please, let me welcome Daryle Pellegrino from MLB Residential Mortgage. Hi, Daryle. How are you? It's such a
Good,
pleasure
Debbie.
to
Thanks
have
for
you
having me. I
join us.
really appreciate it.
Oh,
Yeah.
it's so great to have you join us today. So I know that a lot of first-time home buyers often have this question. Does making a large purchase before the closing affect the ability to close on a loan?
It does. It could have a major negative impact, dramatic impact. Think of it this way. Someone's qualifying you for a mortgage based on a certain amount of debt. And then if you go out and buy a car for $300 or $400 or go buy $10,000 worth of furniture for the home and have a $400 minimum payment, it affects your qualifications in financing. And something like this sometimes doesn't show up until the end of a transaction because nobody knows about it. So it is very important that you want to consult with your mortgage advisor before you make any purchases that are outside the norm. And the other thing it does is it affects your credit score, because now if you have a new inquiry, not necessarily the inquiry, but a new account, that's going to drop your credit score just a little bit. And interest rates are based on credit scores. So if your interest rate just drops below a certain cliff, it could affect your pricing as well. Avoid large purchases.
Yeah, that makes a lot of sense. Wonderful. Thank you. So, many of my buying clients, they love to prepare and plan in advance. What would you say a lender looks for when qualifying a borrower?
The number one thing, the ability to repay the mortgage. Can you repay the mortgage? Can you make the payments? People have credit issues throughout their life. Things happen to us. We understand those things. Whether your credit is high, whether your credit is low, whether your down payment is high or whether your down payment is low. If we don't earn the money to make the payments, that's a problem. So the number one thing we would look at is ability to repay. And then the second thing we looked at, we like to see a satisfactory credit history. Satisfactory is a very, that word can be, stretched. There's programs for everyone. If you have the earnings, the credit could be overlooked.
Excellent. Wonderful. Thank you. So, as a real estate agent, my clients often, they get confused between a pre-qual and a pre-approval. Can you talk about what's the difference between getting a pre-qualification and a pre-approval, and does that have any impact on winning an offer these days?
Major impact on winning an offer. Major. I don't know the numbers, but for every house that's for sale, there's a lot of buyers. So a pre-qualification is me and you talking, and I'd say, you look great. Here's a letter. You're pre-qualified. It doesn't hold any weight. A pre-approval is a little more in depth. Many different lending institutions work it differently. I know for us, what we do is we ask for a pay stub, a W-2, a bank statement, and a driver's license. With those things, we could now assist somebody in helping them with their financing. Do you follow what I'm saying?
Yeah, that's fantastic. Wonderful.
So that's what it'd be.
Fantastic. So, I think that there's a little bit of confusion out there on how much to put down on a house. Is there a magic number on how much does someone, how much do they save for a down payment?
In northern New Jersey, it's tough to save. Cost of living around here is quite high. So what we like to tell people is save what you can. If you know that you're purchasing a home, save extra. The nice thing is people who are putting a larger amount of money down, so more substantial, 20, 40% down, they could take advantage of, such great rates today. And you know what? They have the flexibility for borrowers who maybe veterans that go no money down, or somebody who wants to purchase a home and put 3 and 3.5% down. There's also the flexibility to that. However, the more down payment that someone could come up with, the lower their payments would be, and the more equity they have in the house. Their offer may be considered a little bit stronger if they had more of a down payment, but we don't want that to deter anybody from wanting to purchasing a home.
Yeah, no, I agree with that. Wonderful. So I really love when my buyers are educated about all the costs involved. Can you go over what's included in a mortgage payment?
Absolutely. So in your monthly payment, all right, your monthly mortgage payment consists of the principal and interest that's paid to the bank, the monthly taxes. So if someone's taxes are $12,000 a year, that's $1,000 a month, your homeowner's insurance and PMI payment. So that's all lumped into one payment. And then your taxes and your insurances are then dispersed by the mortgage company. Now, as far as, and that's what they're going to pay on a monthly basis. Now, as far as how much money someone would need at closing, it's different for every house. Depending on the taxes, depending on qualifications, closing costs could range a little bit. But your monthly payment is what people are really concerned with. And that consists of the principal and interest to the bank, the taxes to the town, your homeowner's insurance to protect your home, and any PMI payment if you happen to put less than 20% down.
Yeah, sounds like a lot of variables.
Yes, it is. You know, this isn't like 10 years ago where, you know, everybody got the same loan, everything was the same. Everything is customized based on down payment, credit score, different situations, how long on the job, stuff like that.
Yeah, no, that makes sense. Excellent. So some of my clients need to close on a home yesterday, while others have a little more time. What would you say is the typical loan processing time from start to finish?
Okay, so from when a sales contract is provided to a mortgage company, that's really when the mortgage process would start. All of the stuff before that was just processing by the loan officer, organizing documents, get everything ready. Once a contract is signed, a file is usually disclosed, which means documents are sent to the borrower within 24 hours. Once we receive those back, the loan goes into underwriting, and underwriting time is about 3 days right now. So you'd be out of underwriting within a week. We order an appraisal. Appraisal takes about 7 to 10 days to get back. And then the process there for the mortgage is all complete with the exception of title work that would come in from the attorney. It's really, it's pretty seamless. If you have a client that is prepared and good with paperwork, the process is quick and easy.
Wonderful. Well, that leads me to my next question. A lot of my clients, they want to be sure that they're doing everything right. So is there anything a borrower can do to make the process just a little bit smoother?
Yes. Have fun. Now, number one is this is a great, you're buying a house. You know, our job is to help keep the nerves, you know, at bay, because that is the case when you're purchasing home. But best thing is we love the buyers that are upbeat, fun, excited. We find that a quality borrower and potential home buyer is someone who's good with paperwork. Mm-hmm. You know, if something is asked for, provide the document in a timely manner. The thing we can't do is we can't buy time.
Right.
So when a request is made, you know, waiting 4 or 5 days sometimes could delay the process. So what we like to do is just, we're in communications with everybody. We like to stay in communications. You know, that would be the key. Communication and staying on top of all the paperwork.
Yeah, I would definitely have to agree with communication. Absolutely. So important these days.
Yep.
So, you know, home appraisals, they can put buyers and sellers on edge. Can you talk a little bit about what happens if an appraisal comes back too low?
Yes, it happens once in a while. The first thing we would do is look at the appraisal. Are there any inaccuracies? Did someone happen to make an error? Did they happen to have a bad day at the office? You know, sometimes within the appraisal, there's things that need to be adjusted. From there, if there's no adjustments that can be made, we look at what is currently under contract that's going to be selling very, very quickly. And then those comps could be used, because an appraisal may be coming in low. It doesn't mean it's a bad appraisal. It just means the appraisal didn't catch up to the market that's selling right now. So we would go on, find your under contracts, maybe contact the listing agent when you're closing. You know, we can't get numbers, but, you know, the closing date, great. Now we know that we can maybe work that and get a new comp in there. Okay, after those are exhausted, then what happens is the seller and the buyer would have to look at it themselves, and they'd have to figure out through negotiations what they would think is best for their situation. And sometimes we always want everything to be fair. And many times it doesn't get to that point because there might be an inaccuracy, or you have a new comp coming up. Because don't forget, the appraisal happens so far before the closing anyway, that there's other houses that are going to sell.
Yep. No, this is
there are solutions.
Perfect. Wonderful. Well, I have one more question, Daryle. Would you say that COVID affected the mortgage industry? And if so, how?
Yes. It had something I've never seen. I've been doing this for 25 years. I've never seen anything like the last year. Forget about rates going up, rates going down. We're talking about people who have a job and are buying a house and they lose a job before they close. This is, this is crazy stuff to happen. Now, that's the worst of the stuff. The nice thing is everything is coming back to where a certain norm in mortgage lending. Okay, the key with COVID and the effects it had, it really affected our self-employed borrowers. And there's solutions for everybody. But the thing is, if COVID affected anyone, it affected one paycheck at any point over the last year. They just want to, maybe people want to consult with someone first and just, dig deep in the paperwork and get things taken care of. Believe me, it doesn't mean you can't get a loan. It just means let's look at the situation that you've been in and then go from there. You might have had a forbearance when you were out of work or something like that. Different things like that. So it's just good to consult with someone and talk with them in advance, because you might have a special circumstance that might take an extra, 2 or 3 weeks to kind of, work it out.
Great. Wonderful. That's such great advice, Daryle. So, Daryle, you have definitely given our home buyers a lot of very helpful information. I would like to sincerely thank you for taking the time out of your very, very busy schedule to answer some of my questions.
Thank you. I really appreciate you having me. All right.
My pleasure. If anyone has any additional questions about home financing, please don't hesitate to reach out to Daryle. His contact information will be located in the description below. Thank you everyone for joining us, and I hope you'll join us next time for another episode of Bergen County Today, where we get to know residents, business owners, and local officials of Bergen County. Thanks, everyone.